Welcome back to the channel, traders and investors. Today, we're diving deep into the fascinating world of hard-to-borrow stocks and short squeeze potential, focusing our microscope on a very unique name, BJDX. We'll break down exactly why BJDX landed on our screener, what its current metrics mean, and what you need to know about its potential. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about BJDX. This is a microcap stock which often brings its own set of dynamics to the market. Looking at recent price action, BJDX has seen a static period. Today's change is plus 0.0%, the last 5 days show a plus 0.0% change, and over the last 30 days, it's also at plus 0.0%. Now here's where it gets truly interesting, the volume. Today's volume for BJDX is 0 shares, and its 30-day average volume is also 0 shares. Relative volume is 0x average. This means there's currently no trading activity happening in BJDX, a crucial point we'll circle back to. What is cost to borrow and why it matters? Before we get further into BJDX's specific situation, let's clarify what cost to borrow or CTB really means. Imagine you want to bet against a company's stock you believe its price will go down. To do that, you need to borrow shares from someone who owns them, sell them, and then hopefully buy them back later at a lower price to return them. The cost to borrow is the fee you pay to borrow those shares. It's like interest on a loan, and is typically expressed as an annualized percentage. When this fee is high, it signals that there is strong demand to short the stock and or the supply of available shares to borrow is very low. A CTB fee exceeding 100% annually means it would cost you more than the value of the shares themselves to hold that short position for a full year. Why this stock is hard to borrow right now. Now let's apply that to BJDX. This stock appeared on our hard-to-borrow screener with an astonishing annualized cost-to-borrow fee of 745.4%. Highlights 745.4%, that's an incredibly high rate, indicating immense demand to short or extreme scarcity of shares available to borrow. The estimated float for BJDX is a very tight 0.9 million shares, which naturally contributes to a limited supply for shorting. Our internal composite squeeze score for BJDX currently stands at 40.5 out of 100. However, the critical caveat here, as we noted earlier, is the 0 shares of volume. This indicates a high theoretical interest in shorting, but no actual trading activity to back it up or facilitate any movement. Squeeze mechanics explained. So, what is a short squeeze? It's a situation where a heavily shorted stock rapidly increases in price, forcing short sellers to buy back shares to limit their losses. This buying action further pushes the price up, trapping more short sellers and creating a cascade. For a squeeze to occur, you typically need a combination of factors: a high short interest, a limited float, catalysts that drive buying pressure, and rising cost to borrow fees that make it expensive for shorts to maintain their positions. When short sellers are forced to cover, they create buying demand. For BJDX, while the CTB is sky high and the float is tiny, the absolute lack of volume means that while the potential for a squeeze might exist if trading ever resumes, the current market dynamics simply aren't present to trigger one. It's also important to remember a high cost to borrow does not guarantee a squeeze. It can also mean short sellers have very strong conviction that the stock's fundamentals are weak and are willing to pay a premium to stay short. Dilution risk check. One major factor that can completely derail a short squeeze is dilution. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide liquidity for short sellers to cover their positions or for new shorts to enter, effectively neutralizing any squeeze potential even if the cost to borrow is high. Our dilution risk check for BJDX found no recent dilutive SEC filings such as -1s, -3s, or 424 in the last 90 days. We also found no recent reverse split for BJDX in our look-back window. So, from a filings perspective, the risk of recent dilution appears low, which is a positive sign for any squeeze thesis if and when trading activity picks up. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given BJDX's unusual situation with a high cost to borrow but 0 volume, what should you watch for? First and foremost, any resumption of trading volume. Without volume, a short squeeze simply cannot happen regardless of the CTB. Should chart hypothetical volume spike, look for news catalysts that might spark investor interest and bring buyers or sellers into the market for BJDX. Also, keep an eye on the cost to borrow, though it's already extremely high. Monitor changes in shares available to borrow if that data becomes accessible. Our composite squeeze score of 40.5 indicates moderate potential, but the lack of liquidity overshadows all other factors at this moment. This truly is a unique, almost dormant situation. BJDX presents a fascinating case study with its exceptionally high cost to borrow and tight float, juxtaposed against a complete lack of trading volume. It's a powerful reminder that while high CTB can flag potential squeeze candidates, it's just one piece of the puzzle. Liquidity, volume, and catalysts are equally, if not more, important. We hope this deep dive into BJDX and the mechanics of hard-to-borrow stocks has been educational. If you found this video helpful, please give it a like, subscribe for more in-depth analyses, and let us know in the comments what other hard-to-borrow stocks you'd like us to cover.